This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today I thought I'd do something slightly different. I'm going to present to you some what I believe to be compelling data that shows this time is actually a little bit different, okay? And those kind of words are not the kind of words we should get used to using, but objectively speaking, sometimes we can point at things and say, that is new, right? We haven't seen that before. I put together a little thread yesterday. I'm going to run through that and show you just a few things that are, objectively speaking, a little bit different. In the process of this, you're also going to notice that altcoins are not doing very well. But, okay? I know everyone knows by now I'm not a fan of alts. I don't really track them. I don't really care for them. A lot of people disagree with my opinions on them. But I thought what I would do to save me just repeating myself today and saying Bitcoin's going to range until the end of the month and we need to find some cycle lows and then Camel will get long, blah, blah, blah. Rather than repeat ourselves, I thought what I would do for the altcoiners out there is show you how I would personally think about trading altcoins if I were to do it. Now, this is by no means an endorsement for altcoins. Full transparency and disclosure, I am likely not going to use this method because altcoins are just outside my risk profile. Everyone has their own risk tolerances. For me, altcoins aren't super attractive. But if I was going to do it, I could implement a very, very simple strategy that would at least save me some of the heartache, some of the opportunity cost. I will show you a couple of techniques you can use just to give yourself a piece of confidence that actually this altcoin has a chance of moving up, rather than just buying it based on the fact it's a shiny project or it's going to replace Bitcoin or it's the next Bitcoin or whatever. All of that is BS, okay? And it's not specific to altcoins. Any news article you read about the stock market, I also think is BS. As you know, anything Powell says at FOMC, I also think is BS, right? The numbers, the macro data, all of that is fake. I only focus on the cycles. And there's a reason for that. It's because everything is always priced into the charts all the time. But like I said, what I want to do is kind of just clown on altcoins for a bit, point at some things that are different, and then try to be as nice as possible, show you how I would, as a pro trader, get underneath some of these squeezes, show you a few criteria that I would want to see met if I was going to trade these things, and if we were going to be able to say, yes, that thing is actually in an uptrend. So hopefully you'll enjoy this. Even if you're not going to trade altcoins, you can still use this strategy for any asset. So without further ado, let's dig in, okay? As I said at the start, this time is actually a little bit different. Now, you're not really supposed to say that in a market, but hear me out, okay? It actually all started with the bear market low undercutting the all-time high back in 2017. You can see prior all-time high, we never came back close to it in the bear market lows. Same deal here, never came back close to it in the bear market lows. And this cycle, when we got to the bear market in 2022, the FTX liquidation cascade and blow up caused us to actually pierce through the prior all-time high level. We'd not seen that before. So that was the first thing that we can say is, objectively speaking, a little bit different this time around. Something else that was objectively speaking different is this was the first cycle we saw an all-time high before the halving, okay? So halving 1, all-time high afterwards. Halving 2, all-time high afterwards. Halving 3, same deal. Halving 4, of course, we saw an all-time high early. Now that's the first time. So it doesn't really matter since it was followed by about 7 months of consolidation, and now we seem to more or less be right back on schedule for a normal right translated cycle. At least that's what it looks like to my eyeball. But objectively speaking, again, that was different, that was new. A lot of people said it's never done that before, therefore it couldn't happen, and sure enough, there it is. It's also objectively true, and I've pointed this out a bunch of times, that whilst people are describing this cycle as the hardest one ever, this is actually the easiest. For the simple reason, it's far easier to sit through 20, 22% corrections. The biggest one we've seen was 33% top to bottom, and it didn't happen in a big crash. It didn't look like the world was over. It just was a nice orderly walk down, a bit of a range, consolidation for 7 months, and then we broke out and did a double off that low. Even at the hard right edge today, we've got a whole heap of people doom posting, calling tops, saying this is the hardest cycle ever, but we're only down 18% from the highest high to the lowest low, and right now we're only something about, 8 or 9% off the prior all-time high. So I was saying yesterday, this is a liquidation for ants so far. And the reason I say that is because when we look back, this right here was a 66% decline, okay? That was 52% top to bottom. And then as you can see here, bunch of 40s, bunch of mid 30s. Believe me, this is a lot harder to sit through. This was certainly a lot harder to sit through than anything we've seen this cycle. So I appreciate if you come from a stock trading background or you have no financial market background, then all of these shakeouts may well seem intense to sit through. But trust me, this is as easy as it has ever been, and you can see that by the numbers here. So once more, this time is different. And I actually postulate this is due to a strong institutional demand and the spot ETF supporting the price the whole way up. I don't think the market has been allowed to correct this much because there is so much institutional and ETF demand under here. Of course, there's also the market cap factor at play here. It's much harder to pull a market cap of 1.3 trillion down by 40% than it is back here when we were like 100 billion, okay? Much easier to tank 100 billion by 40% than it is 1.3 trillion. But I still believe most of this is due to the institutional and ETF demand. So far, so good, right? Happy days, different, volatility decreasing. And objectively speaking, another difference we've had here is in prior Bitcoin bull runs, we had ETH BTC moving to the upside in an uptrend, higher highs, higher lows, outperforming. We saw the same thing in this cycle, Bitcoin in a bull market, ETH BTC trending up the whole time. Now, objectively speaking, this time is different because ETH BTC has been trending down the entire time that Bitcoin has been trading off of its bear market lows in an uptrend. So once again, this time really is different. We shouldn't be saying this, it's supposed to be cursed words, but how else do you interpret that? For the record here, please don't shoot the messenger. I'm not saying this has to continue indefinitely. I'm not saying this has to go to zero. This is not a comment on the future expected performance on Ethereum at all. This is simply me pointing at these two going up whilst this one is going down and saying, objectively speaking, it looks different this time around. I'm not suggesting that we couldn't do something like this. Okay, like I said, it is not a comment on the future performance of ETH. It is simply me pointing at this and saying that one's going down whilst the other two were going up. Now, I suspect some of that ETH underperformance was due to Solana stealing the show and capturing the bulk of the meme coin market. Solana has seemed to act as a liquidity drain for altcoins, and we can see that here, right around the approximate time Pump Fund launched. Solana, as you can see, goes to the moon, and the top 125 alts, excluding the top 10, trending to the downside. So I suspect this is what's behind some of the relative outperformance in the meme coin market and the underperformance, relatively speaking, of the altcoin market. But again, this time is different. We didn't have Pump Fund last time around. We also didn't have Solana having the bulk of the meme coins built on it. The last two cycles, it was things being built primarily on top of Ethereum. So once more, we can point to this and say this time has actually been different. And it doesn't stop there because of late, we've even seen a decoupling between Bitcoin and others. Black, which is others, tracks Bitcoin the entire way in all prior instances, in all prior cycles, until just recently at the hard right edge where Bitcoin has diverged monstrously away from others. Now, again, it's not really a comment to say this is going to continue. It's not really a comment on direction. In fact, if you're going to ask my opinion or if you're curious, I actually think we do see others catch up here. Now, again, the nuance is that I am maintaining breadth will remain thin on the way up. Just like we saw the stock indexes move higher, and under the hood, it was just the Mag 7 that were carrying them, right? That was what we saw. We saw the Mag 7 stocks mooning, dragging the indexes up, but breadth remained very, very thin the entire time. That is what I'm still hypothesizing is going to occur here. But the net result is others still makes it to the top. I just think not a lot of people understand others can move all the way up here, whilst the majority of those cryptocurrencies in the others index stays below their prior all-time high. So that is, of course, to be determined. But once more, we can point at this and say at the hard right edge, this time is different. This does not look anything like anything we've ever seen before. And the last couple of things I wanted to point out here is, again, my idea of no broad-based alt season continues to play out with breadth on the thin side. And Ben Cohen has showed this here with the ADI trending down during this bull cycle. Again, this time, objectively speaking, is different. We've got Bitcoin and the total market caps moving up whilst breadth continues to thin out. This continues to be the altcoin equivalent of a stock picker's market, right? This continues to be an altcoin picker's market. This is not a broad-based bull run. This is not a broad-based rally, at least not yet. Again, it can change quickly. This isn't really a comment on direction. This is just me pointing at things once more and saying, objectively speaking, this is going down while this is going up. And something else that is weirdly different this time around, and we're going to go through some top 50 alts in just a minute, but whilst Bitcoin continues to set new all-time highs and currently sits less than 10% off of its prior all-time high, out of the top 50 cryptos by market cap, only 3 altcoins are currently above their prior all-time highs, right? XRP, Tron, and Leo. These are the only 3. Now, that is objectively very, very different as well. And again, it kind of speaks to the breadth being on the decline and the thin side. So very, very unusual set of circumstances here. And again, we shouldn't really be saying things like this time is different. Although, as you can see, everything I've presented so far shows that there are, objectively speaking, some subtle differences at play here. And I think, in summary, what is mostly going on here, what we are observing, is a shift from a market that was dominated by retail to a market that is dominated by institutions. The big boys are not here to speculate on the next Bitcoin or some shiny new technology. They're actually here to try and capture the lion's share of this market before it reaches true global adoption. And I believe this is why, number one, we have seen that relentless bid under Bitcoin and the reduced volatility on the pullbacks. And number two, why we continue to see Bitcoin soak up all of the liquidity, Bitcoin dominance continue to climb, and most altcoins to be underperforming. If this hypothesis is correct, if it's proven to be a theory, if breadth remains on the thin side, and the institutional demand remains underneath Bitcoin, then when this cycle is all said and done, it is going to look very, very, very unique compared to the prior cycles. And that again would kind of fit with the idea that we're no longer in a retail-driven market, but instead in an institutionally driven market. As always, for the sake of altcoiners, I hope I'm wrong on this. I hope you can all get rich. As ever here, I'm simply pointing at things and calling them how I see it. That's why you come to this channel, no doubt, because you want to get my opinion. I don't know why else you would be here, frankly. So that's my opinion, and I'm sticking to it until invalidated. Of course, as always, if I am invalidated, I'll hold my hands up and accept that and admit to that. Now, as promised, I said that we were going to look through a few altcoins here, and just as an exercise, show you how I would potentially look at these markets if I was going to say to myself, okay, Camel, you're tasked with making some gains from the altcoin market. What is it you want to see? And I think a very, very simple and underlooked idea is this idea of stage analysis. For anyone that doesn't know, we have 4 stages. We have accumulation down the bottom, kind of like Wyckoff, right? It's a similar thing. There's a few variants of this, but they're all kind of the same, right? Accumulation at the bottom, stage 1, sideways market. Here's the key part. It chops up and down. It oscillates around the 30-week moving average. Then when accumulation is complete, we are ready for stage 2, which is markup. Okay, stage 2, you'll notice we break above the 30-week moving average and we do not cross back below it. We have a series of higher highs and higher lows until stage 3 occurs at the top, where we see distribution, and once more we oscillate and chop around the 30-week moving average before, of course, we enter stage 4 markdown, where we trade consistently below the 30-week moving average before entering stage 1 again. So now what I'm going to do is just grab a few of these altcoins. We're not going to do all 50 of them, okay? I'm just going to work my way down the list, and we will use this simple idea to let us know, are we in stage 1, 2, 3, or 4? Because realistically, there's only one stage that you want to be in an altcoin, right? If you're going to buy an altcoin, you want to ideally buy it on the break of the range. And ideally, you don't want to be holding an altcoin if it's in stage 1, because that's just wasting opportunity, that's just wasting time. You certainly don't want to buy an altcoin if it's in stage 3, where it's about to top and distribute, right? And of course, needless to say, we don't want to be buying in stage 4 either when this thing is just going to continue to trend down. So the only stage we're interested in here is stage 2. And we can easily identify whether or not we're in stage 2 because stages 1 and 3, we oscillate around that 30-week. Stages 4, we're below the 30-week. And therefore, stage 2 is the only one we're interested in, and we are above the 30-week moving average. So now let's take a look at Ethereum, okay? Just to illustrate this point once more, we can see, if I zoom in here in the last cycle, here's the 30-week moving average in blue. Here is the range for the last cycle. You can see this goes back from about 2018 to about 2021. What do you notice about the price? We are oscillating and chopping the 30-week moving average up until about here where we get a breakout. We chop it some more and then we move to the upside. Then look what happens. We go from stage 1 accumulation to stage 2 markup, where we're able to ride this thing all the way up to a top. Okay, at that top, we then start to chop and oscillate around the 30-week moving average before we enter that markdown campaign and trade underneath it again. Now, you will notice there's multiple times where we kind of chop the 30-week moving average, even some extended periods of time where we trade below. But we can use a couple of techniques here to let us know whether or not we want to be in the trade, just using a 30-week moving average as an on and off switch for being in and out of the market. When we get pullbacks, we want to see tennis ball action here, not egg action, okay? A tennis ball, when it comes in to the 30-week moving averages, bounces off strongly. When it comes into the 30-week moving average, even if it goes below, it bounces off strongly. Same deal here, bounces off strongly. What we don't want to see is this splat, which is like an egg, right? It comes down here, oh no, splat. Okay, we don't want to see that. We want to see tennis ball action, tennis ball action, tennis ball action. And the second thing is, if we can't get tennis ball action, if we get eggs and splats, then we probably want to exit our position, lock down the profit, and wait for a true clean break above that 30-week again to ride the trend higher. So when we use this exact same technique today, what have we got? Because it looks an awful lot to me like what's happened is we went stage 1 here, okay, broke above, distributed in the top in here, had a markdown, okay, reaccumulated, broke out, and then what? Since then, we have chopped this moving average a few times before now breaking down and comfortably trading below this 30-week moving average. So the question to you is, if you're bullish Ethereum, why would you be bullish here until at least we can get back above the 30-week? Okay, the 30-week is turned down, not up. Does this look here, trading below the 30-week with a downward sloping 30-week moving average, look anything like stage 2 to you? Because to me, I would say until such time as we can morph out of a sideways range and into a stage 2 markup with a turned up 30-week moving average and price trading cleanly above it, I don't think there's any reason to be anywhere near this asset. Remember, this can stay underneath the 30-week moving average indefinitely. It can also trade sideways in stage 1 again indefinitely. Just because this diagram shows that we go from stage 4 to stage 1 and then the whole thing repeats, okay, does not necessarily mean every asset does that. Once we get to stage 1, we can stay there indefinitely, we can stay there for years and then again mark down. And that's really all there is to it. Now you know everything you need to know about being in a markup campaign or sitting on the side and waiting for one to show up. Unless we're above the 30-week and unless the 30-week is sloping upwards, then it is malpractice to be holding that asset and expecting it to go up. Okay, that's just not how this works. Let's take a look at XRP. XRP is a bit of a weird one because this thing kind of trades different to a lot of assets. It kind of spends an awful lot of time doing nothing and then just explodes. But you can clearly see here, okay, oscillating around this is clearly stage 1. Then what happens? We break above, we move into stage 2, we trade cleanly above the 30-week moving average whilst the 30-week moving average slopes up. When we do get pullbacks, okay, they're met with tennis ball action, tennis ball action, tennis ball action. We don't come back here and then just splat around, okay, like an egg. And now for the first time, we appear to be trading below it. For the first time, this thing appears to be leveling off. So again, we really need to see tennis ball action out of here and this 30-week moving average continue to support price and continue to trend upwards. Otherwise, we're going to start to see something more akin to this with the moving average, something more akin to this, and then a markdown campaign. And of course, if that's what we observe, then by the time we get to here, you certainly want to be taking the profit from back here. Here's a nice example with Solana. We have got stage 1 down the bottom clearly, okay, oscillating. Then stage 2, we break out into markup. Again, tennis ball action, resolves to new highs, continues to be supported by an upward sloping 30-week moving average. Then notice what happens here, slightly different from what I've shown you so far. We go back into accumulation mode. This is actually reaccumulation. So instead of this being stage 3, we reaccumulate again in another stage 1 before another markup. So there we go, accumulating before again we get another breakout, another upward sloping 30-week, and again it is used as support as we continue to the upside for Sol. And right now, once more, we are chopping around and oscillating, so this could just as easily be stage 3 forming before a markdown, or of course this could continue indefinitely for a while and then of course break to the upside. But the question is, why do you want to sit in an asset that is potentially going to do this indefinitely only to resolve to the downside? Wouldn't it make more sense to watch this from the sidelines, wait for a true range breakout, wait for the curl up and support price, and then enter somewhere here so that you are immediately capturing the stage 2 markup? Similar concept with BNB, right? You can see we oscillate, we chop, range stage 1, then we mark up stage 2, we reaccumulate here, still chopping. This looks pretty top to me. This looks like a huge stage 3 campaign, doesn't it? So again, with a downward sloping 30-week, okay, price trading significantly below it, it's only reasonable to expect this thing to remain bearish until those things are reversed. Is there any point in holding the market here, in holding a bag, hoping and praying that what comes next is this? Or does it not make sense to lock in the profit from down here, wait for this thing to reverse and turn up, wait for this to get back above and support price, and then re-enter knowing that once we re-enter, we're going to immediately capture the stage 2 markup? I'm going to do a couple more here. Doge, Cardano. For Dogecoin, very, very similar deal, right? Stage 1 clear, okay? Then we break out stage 2 markup. We kind of retest that range break. And then again, we break above the moving average and we are supported the entire way up. Now remember, anywhere in here will be a fine entry, anywhere. All the while we're making higher highs and higher lows and we're above an upward sloping 30-week moving average. It doesn't matter where you buy, okay? All the way until the price crosses back below the 30-week, we're capturing immediate gains here. And then the moment we cross below, you can say, okay, we're starting to chop now. We're looking for tennis ball action. It doesn't really come in. We continue to splat around. We continue to chop and oscillate. We do not trend up. The 30-week moving average does never curl up and never support price again. All the signs are there, keeping it very, very simple to know we don't want to be anywhere near this market by the time we're in this kind of neighborhood. And again, it's easy to say, well, this is just a shakeout. This is just a cascade. This is what comes next. But again, with a simple 30-week moving average, there's no reason to think that, okay? This could happen indefinitely. And if it is going to turn back up, okay, if this really is going to curl and support price, then anywhere in here is a fine entry, okay? Higher high, higher low. Use the 30 weeks to guide you on the way up, just like we did here. No problem. Pretty simple strategy, and it will keep you from just getting wrecked over and over and over again. ADA looking pretty trash, isn't it? Got a little bit of a stage 2 here. Clean, chopped it. Egg, splat, chopping more. Okay, looks an awful lot like stage 3. Now it looks like it's already entered stage 4. Now again, it could easily change. Like I said a million times, this thing can curl back up. If it does, we'll see this cross above, and then we can get in somewhere in here and hope that another one of these big markups is coming. But for now, to just sit here and be bullish while we're trading below the 30 week means you don't know what you're doing. You don't understand the difference between an uptrend and a downtrend. And we'll do one more since Tron, that'll make the top 10 done. Tron, I mean, you can see the same thing, right? Stage 1, stage 2, heavily supported price. We're now chopping around it, okay? So pretty good time to be sat on the sides waiting to see what happens. And again, as always, if the 30-week moves and curls up, if price gets back above it, then anywhere in here should be fine, and we should be looking for a repeat of this. So that is one simple strategy, that you only need a 30-week moving average on your chart and a knowledge of 4 stages of market analysis to be able to let you know when you should be in the market and when you should be out the market. You can also apply this, of course, to your own altcoins and see whether or not what you're holding is actually in an uptrend or a downtrend, is actually bullish or bearish biased. I still maintain that this is going to be a heavily Bitcoin dominated market. We did deviate away from my Bitcoin dominance fractal, but we've ended up kind of in the same place anyway. So, you know, maybe this thing's going to break down, maybe we're going to get alt season, or maybe the institutions are going to continue to drive this well into the 70, 75, 80% region, okay? Nobody really knows. I would speculate it's probably going to remain the Bitcoin show for a little while longer, and then perhaps once Bitcoin gets above 150 plus K, we might start to see some rotation into alts. That's to be determined. There is also, by the way, I should have mentioned, a tutorial in the playlist on how to find and trade momentum stocks. It shows you a similar concept to this, where you can draw boxes and buy the breakouts from the boxes. It shows you where to put the stop loss and that kind of thing. So maybe check that out if you're interested. And other than that, what is there to say, right? The dollar appears to be on its way to fail the cycle, and then we can say for sure that is the weekly cycle high, and we will look for a weekly cycle low decline. Bitcoin continues to chop around in this range and not do anything, continues to need to waste more time. Gold and silver continuing to keep meat on the table for the family, so happy days there. And the stock market, again, similarly to Bitcoin, continues to chop around in this range and not do a whole heap of anything. So no real changes. I hope you found value here today. I hope you consider what I said. This time is weirdly different. But other than that, I'm sure we'll get through it. In the meantime, I hope you're doing well. Take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.